Today we're going to look at how to invest in the stock market. Last year's story would have been all equities, no bonds. Now in 2020, this market is getting very strange. So it's already given up all its gains at the end of January. It's trading on everything but fundamentals and technicals. We are looking at the coronavirus, what Trump says, what China's doing. So getting any consistency out of this market is probably out of the question. So there are ways to invest in this, and I'm going to show you how. But this market is treacherous, and everything they said in about 2019 is changing. So I'll show you how to navigate this no matter what the market does, how to make some money, how not to lose some money. You can do it, and it's not easy, but it's something I've developed over like 16 years of market craziness. So I will begin on doing that, and I will show you how to do it. And I'm going to use a program called Stockrover. And this is like the Swiss Army knife of investing. You can see how much volatility there is in the market. You can compare, hey, should I be in stocks? Should I be in bonds? Should I be in mutual funds? Should I be whatever it is? You can compare it and see which is better for you, and I'll show you how to do that. So today has been a very interesting day. The market has given up all of its gains, and it doesn't look really good, so we have no idea what's going to happen. But it's hopefully it's good, but I don't know. I wish I could tell you. So I will show you how to do this, and we will begin now. Well, here we go today. The market is not at all happy. It is down 535 points on the Dow, 50 points on the S&P. What that's doing is it takes us back down to zero. So any gains we had in January are gone at the end of January. And it's a general sell-off. I mean, you look at all the sectors, consumer, real estate, everything's down except consumer cyclical. Even utilities are down. Wow. This is not good. But anyway, everything's down. ETFs, let's look at that. Everything's except municipal bonds and taxable bonds. So this is a general sell-off. If you're in equities, you're losing money today. If you are in bonds, you're not making a whole lot of money today. So the question is how to invest in the stock market 2020. It can be done. It's got to be done differently. I started a type of investing back in 2009 when on days like this it was just about every day. Every day it was going down, and yet I had clients, I had retirees that still needed check every month, and if they lost all their money, they'd be destitute. So what I did is I started a pretty much a different type of investing. It's total return. I'll show you what I'm doing, and we'll look at all of my portfolios and all of my client portfolios. This one's up, and this one's up. So what is different? Let's look at the different funds. This is a total return. Now you find me harping a lot about beta. So this has a beta of 0.52, which is like half of the S&P. So it should be down about half. So it's down about half, but it's still down. I mean, it's the beta. Even if you had a negative beta, then it would probably be up. So this one has a beta of 0.6. It's down 0.86, which is still considerably better than the market. So and so it goes. I mean, the low beta is good, but it's not going to keep you from losing money. And you just lose less. Unless, and there is something you can do, if you have low beta, which I like, and then you put in a hedge. So I'll show you what this looks like. This is a really good portfolio. Wow, it was good. It was up like 6 points in the summer just a few days ago. Now it's up 1.5. So it was up 23% last year. It's got a really low beta of 0.43 and a yield of 8. So it's down 0.97 today. Not as bad as the market, but still, I mean, it's down, okay? And then there's this one. This is mine. It's still beating the market, pretty well. It's up 5.4 and the market's flat. It's down 0.98 today. So it's down too. Everything's down. So what do? I mean, this is how to invest in the stock market in 2020. How can you invest and maybe even not lose, but actually have some returns? So this is what I developed in 2009, is you put a hedge in. So this is the monitor without a hedge. This is the monitor with a hedge. And the hedge is the VXX, which is a volatility hedge, which it doesn't do much of anything unless there's a big downdraft in the market, and then this acts like almost like a parachute. You get outsized moves in this. So for today, it's up like 10%. So you can have, this was 7 positions with the VIX, and that makes 8 positions, and it's up 0.47 as opposed to being down 0.9. That is the difference a hedge can make. And it also moves the beta up to 0.36 from 0.43. Not a big move, but a big enough to make a difference on whether or not you're going to make money in this crazy market or not. So that is one way. I mean, it's the only way I know is you got to have a hedge. You've got to have something that runs counter to the market. That means when the market goes down, whatever the position you have has to go up. And this is my portfolio. It's down 0.98, but with a hedge, it's up 0.88. So that's much better. So why wouldn't you put a hedge in? So let's say you had $1,000 to invest and you're going to get in the market. And so you say, this has 6 rows. So that's with the hedge. But if you want to have $200 positions, you had $1,000, you'd have to say knock one of these out. So let's say IEP, that's in the oil and gas, it's energy's getting whacked. So we could just say, okay, we're going to get rid of this, and boom, you'd have 5 positions, $200 a piece, the market's getting trashed, and you'd be up 1.4%. I mean, that's how you do it. I mean, I can't think of another way other than being net short. That means the market, whereas the more the market goes down, the more money you make. So this is the only way I know of, and I'll show you here. I track these. Which would be the best inverse funds? Inverse funds, of course, your broker or your brokerage will have a cow if you buy an inverse funds, because they do not track well, and you're going to have to take some kind of class or something to do an inverse fund. But anyway, this is how they work. They have a negative 3.59. This is short the Qs, QQQ NASDAQ. So it's up 3.76. And this is SDS. This is a double short S&P, which means if the market is down, S&P is down 1.56. This is up 3.08. So it goes up twice as much as the market goes down. This is a 1-to-1, so this should be down, up 1.59. That's tracking. So this is what you do if you want a hedge. And the reason I like the VXX is it doesn't really do much. I mean, if your portfolio is going up, this will go down a little bit, but it won't kill the upside. Whereas if the market blows up and you're down 500 points, this thing's up 10%. So that is the only way I know how to do it, but it can be very successful when you have a crazy market like this and you really don't know how far it's going to go down. This is the dilemma. This is what we have been having. The market has been trading in a range. So it's been going like this. It's been going up and down and up and down. This is called tail risk. It goes down, but you don't know how far. But then it bounces back up, and it goes down, bounces, a little bit of tail risk there. But what you're really concerned about is this, and that's called fat tail risk. So when that happens, you don't know it's going to happen until it happens. So you've got to guard against a fat tail risk in the market, which this market definitely has a fat tail risk, meaning when it goes down, it's going to go down a lot, and it could go down 10, 15, 20%. So that is what we are guarding against. So that is, it's something you have to look out for. So in conclusion, you don't have to be in this market, but if you're going to invest in this market where you have a lot of risk, you have tail risk and you have fat tail risk, you should invest a certain way. So this is preferred, which we looked at as using for income. It's down 0.2 today, and the months are actually up 0.38. So this is yet another way we were looking at the best way to the stocks to generate income for a portfolio. Today, this stock, the monthly, which pays monthly, has been doing very well, and it also has a very low beta, and that's once again I harp on beta, but it does make a difference, especially in markets like this. So that's about it. This god-awful stock market day. I will leave a link below on Stockover, and I'll also leave 2 Excel files on the 2 hedged portfolios for you to look at and see if that would be appropriate for you. But once again, I've been doing this for 16 years as a financial advisor. I have been through every market horror story, and this is just one of many. It's not even a horror story yet. It may be a mystery, but it could turn nasty, and this is how you survive in different market conditions. It happens, and it's just part of the beast. So have a good day, and we will be talking to you later.